Hey everybody, Economic Ninja. We're going to be talking about Evergrande today, and the reason why it sounds interesting, there's a lot of press and hype right now. You see a bunch of authors, people on videos talking about how this is the next Lehman Brothers, and a lot of that is clickbait. I will explain to you how I see this. A few months ago, I made many videos in regards to what I see coming in the future, and one of those was an event that was coming in the fall, and the economy would start to collapse in the fall, and we have now had it. We have two separate situations going on right now, but this isn't like a collapse like Lehman Brothers, and I'm going to explain. Evergrande is not Lehman, it is Bear Stearns, all right? So first off, we have the de-dollarization of oil right now. Around the world, more and more countries are jumping on this bandwagon, and they're settling trade outside of the dollar. We've already talked about that. I don't need to get into that right now. Evergrande, to give you an idea of its size, and just so you know, this didn't happen overnight, okay? They had received different forms of bailouts last year. They were on shaky ground even before that, okay? It was being reported in 2019. You remember I've talked about the banking system failed in 2019, and even though Evergrande is not a bank, they're all tied. I'll try and break this down as best as possible. So today we're faced with this company. It's a large real estate company out of China, and it does affect the US. I'll get into that as well. They have approximately $300 billion in debt that they are defaulting on. Now, I know there's going to be some people in the comment section, so, oh, look, they've bailed them out today. Yes, China is allowing them to restructure their debt, go out a little farther. That's always one of the first big things they do once it's hit the public eye, okay? When it's behind the scenes, they've been trying to do things and get them fix things for months and months and months. This is old news, okay? Very similar to what happened with Bear Stearns. Now, $300 billion in debt is almost the size of Bear Stearns. Bear Stearns had $400 billion in assets and over 85 years of doing business. This company has, and that's total assets, right? Evergrande has $300 billion in failing debt right now, and they've been in business since 2009, okay? So, not as much history, but also a lot more debt, because Bear Stearns, the amount of debt that was going bad was not there in total assets, okay? So I'm seeing this as the event that I was telling you, that there was going to be a large financial institution that started to break apart. Now, how this affects the United States is I talked about the commercial mortgage-backed securities program about 3 to 4 weeks ago, and it got very little play. And I said by January, everyone will know something about CMBSs. And what is going on right now with Evergrande is they have a bunch of commercial mortgage-backed securities. And I'm telling you, we have whistleblowers trying to blow the whistle in America with how these have been manipulated. The documents have been falsified. These assets aren't what all these investors expect them to be and how they should be performing. And I'm telling you right now, Evergrande has those imploding right now, and those are in American pensions. They're in pensions all over the world, okay? This stuff is all tied in. Now, before you start thinking my pension's gonna implode, is it going to? No, this is not an event that would cause a pension to implode, because of diversification. Now, it could make some pension managers go, oh gosh, that hurt. We just took a hit on these bonds over here. But they're so diversified in other things, okay? But I want to explain something. That's what happened during Bear Stearns. When Bear Stearns went under in the spring of, 2008, I was going, how does anybody not realize how big of a deal this is? And see, what happens is, multiple, tens or hundreds of companies took a hit from what happened with Bear Stearns, or private investors. And then it can only last so long until it starts to fracture other parts of the economy. And so then we have the Lehman Brothers moment. I believe that Lehman Brothers moment, personally, and this isn't financial advice, trading advice. Geez, if you're taking trading advice from a dude drinking coffee with a sweet brohawk, then you got some other evaluating to do. But I believe that the Lehman Brothers happens next year, 2022. And so these are great signposts to be taking the opportunity to evaluate and watch what happens. Now, I will tell you this, it is fully guaranteed that this is the Bear Stearns moment if this debt is allowed to be defaulted on, okay? If they're allowed by the government to just go ahead and just walk away and default on this, you definitely have your Bear Stearns. But this is an evolving situation. Honestly, tomorrow, the Chinese government just come in and go, we're gonna backstop all that, we're gonna make it good. Because really, if you think about it, 300 billion is not that much. What is a lot is the derivatives that are tied to these, because this could be setting off a chain of events down the road, okay? So quite frankly, and I'll back up here, so that's why you want to stay in the video, because the ninja does go off on tangents. If this is tomorrow completely washed away by the Chinese government, or somebody else walks up and a large money fund comes in and goes, you know what, we're gonna take care of you because we know all of our other investments are going to implode if you're allowed to default on this debt, then this is not your Bear Stearns moment, okay? But I just want to make sure you understand that this is a great opportunity to watch the events that are happening. If they are allowed to default and walk away, close their doors like Bear Stearns did, you have now set in motion a chain reaction of events leading up to a crash in the economy next year, okay? So this isn't settled yet. So I hope you guys got something out of this. This is the things that I look at, the way I'm thinking. Again, it's opportunity, because if you see this and it does happen and they are allowed to walk away from their debts, then you are able to go, okay, then I see something bigger down the road, which means I'm gonna prepare ahead of time, prepare accordingly. Like, get out of debt, don't go into risky assets in the stock market, things like that. All right, guys, excuse me, I hope you got something out of this. The Economic Ninja is out.